Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the major EURUSD 10%
On Friday, the EURUSD pair rebounded from the support zone of 1.1637-1645, turned in favor of the euro, and consolidated above 76% Fibonacci retracement level at 1.1695. Thus, growth may continue today toward the next retracement level of 100 at 1.1789. A close below 1695 would favor the US currency and trigger a decline back toward the support zone at 1637-1645. The wave structure on the hourly chart remains simple and clear. The last completed upward wave broke above the peak of the previous one, while the last downward wave failed to break the prior low. Therefore, at this time the trend can be considered as bullish, though it has been changing too often lately due to the news background. Recent labor market data and shifting Fed monetary policy expectations support the bulls. On Friday, the news background was noteworthy, but traders prefer to focus on the talks between Vladimir Putin and Donald Trump in Alaska. On Monday morning, it can be said that the parties reached some agreements, though no details are known. On the 4-hour chart, the pair formed another reversal in favor of the euro and consolidated above the 1.1680 level. This level has been crossed too often lately, so we would not recommend relying on it. The picture on the hourly chart is much more informative and clear. No divergences are forming today on any indicators.
Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look.
The British pound closed Friday with gains, and Monday opened with continued optimism. As noted earlier, the pound has been moving simultaneously within several ranges. Now we see a rebound for the support level 1.3525, which indicates that the 35.25-36.31 range is being worked out, with the price currently heading towards its upper boundary. In this case, a return to support at 35.25, followed by a new wave of growth toward the July 1 high, can be expected. However, if the price develops within the broader 34.52-36.31 range, the 35.25 level becomes an intermediate support, and after testing 36.31, a decline toward 33.64 may follow, marking the lower boundary of the wider range. Should the price move within the 33.54-36.31 range, the upper boundary may not be reached, which would signal a reversal, as was the case on July 24. Consequently, the decline could turn out to be deeper. In conclusion, we observe multiple potential scenarios for the British currency, reflecting its wait-and-see approach. On the 4-hour chart, the Marlin oscillator has shifted into negative territory, creating the conditions for consolidation below the 1.3525 range. However, support from the MACD line lies beneath. Followed slightly lower by linear support at 1.3452. Free wandering continues.
That's all for today. See you online soon.